Have you heard of the lock-in effect? If you've been paying attention to the real estate market, this is probably not an unfamiliar term to you. So let's talk more about it today. The lock-in effect is essentially the fact that people are not selling because they have low interest rates, and the alternative of buying something new with a higher rate is not too appealing. And perhaps you're one of those people and you fully understand. I know I'm one of them. I could probably use a bigger house now that we have a kid, but not super interested in those rates at the moment. So let's talk about what the lock-in effect is and what's happening across the country. And then I also want to compare it to what we're seeing in Phoenix as compared to some of those national statistics. So thanks for joining me, you guys. I'm Caitlin McKegg. If you're new here, I am a real estate broker here in Phoenix, Arizona, and I'm always sharing data on this channel to help you make an informed decision if you're buying, selling, or investing. So I loved this article. I saw this because it kind of goes over what's going on nationally and wanted to share it. The housing market's lock-in effect is very real. Just look at this map, and we'll get to the map in a second. But this goes on to talk about how during the pandemic, home buyers were jumping at the opportunity to get mortgage rates at ultra low rates, 2 and 3%. Wonderful times as far as rates go. Maybe not wonderful as far as the competition goes, but that's another story. Creating a whirlwind of housing market transactions, but now growing frustration is seeping into the industry as those tantalizingly low rates have given way to stark reality of higher rates and fewer transactions. And that's really where we're at right now. We're seeing such low transaction volume because there is really not a huge incentive for people to list their homes, and buyers aren't super excited about home prices nor the interest rates. So we're kind of in this stalemate, if you will. The cause of this housing market shift: enter the lock-in effect, a term that has real estate professionals sounding the alarm and grappling with the consequences of the abrupt change. So homeowners are reluctant to sell their properties, buying something new due to the financial shock that would come with losing their historically low mortgage rates for something with a 6% or 7% handle. So we're seeing this across the country, and we're certainly seeing it here in Phoenix. And I can tell you just from experience in talking with potential clients and people who reach out to me all the time, it's that kind of weighing the decision of, do I really need to move? Should I really sell my house? Am I going to find something better that's actually worth me having a higher mortgage rate? Because there's no way around that unless you have a pretty hefty down payment or you're going to be paying cash. So this goes on to quote some stats across the country. It's happening just about everywhere. East Coast markets like Richmond, Virginia, and Philadelphia saw new listings decline 27% and 26% respectively on a year-over-year basis. Austin saw a 30% year-over-year decline in new listings between June of 2022 and June of 2023. So, and then overall, this is saying that there were 26% fewer U.S. homes listed for sale in June 2023 than June of 2022. Now, if we remember what happened last June, we had a pretty major spike in our supply all across the country, especially in Phoenix, because rates went up and there was kind of a panic of sellers to list their homes, and buyer demand went down and off a cliff, and we just had a lot of homes on the market. Now, many of those didn't end up selling. They were canceled or expired. But we did see price softening because of that increase in supply. So the point of what I'm saying here is that even though we're seeing fewer listings this year, when we're comparing to last year, we're definitely going to see fewer listings because we had a pretty big increase last summer. But let's take a look at this map that they're talking about. This is same title here, but saying that the red market saw a year-over-year decline in new listings. And you can see quite a bit of red here in Arizona, and for sure in southern Arizona and Phoenix area. So we are one of those markets. California seemed to see a lot. We've got it kind of spread out, and then the Midwest, pretty clean as it comes to seeing this year-over-year decline in listings, and then kind of sparse throughout the East Coast, or sporadic throughout the East Coast. So let's compare to what's going on in Phoenix. It's great to know national things, but when we want to transact here in Phoenix, it's helpful to know what we've got going on here. So let me see if I can enlarge this a little bit. This is from the Cromford Report. I am a subscriber, and they're amazing with all the data that they provide and charts and graphs and all that great stuff. So this is new listings year to date on a daily basis. And here's where we're at today, at about 48,448. And comparing to 2022, which is the blue line, I think this goes to July 25th. So let's find July 25th up here. We're at 71,240. So certainly under the amount of new listings that we saw last year, about, I think, around 30% or so. So it's definitely lower, not a surprise, but I also threw up 2021 on the screen so that we can compare to 2021 when we didn't see that big surge in new listings. And we're still down quite significantly from there. They were at about 67,000 last year. So it's clear that we are seeing a big change in new listings year to date. And a lot of that does have to do with these homeowners not wanting to sell because the alternative is not a rosy picture. But let's also look at the pricing, because I did mention that prices softened last year when we saw that big increase in listings, but we've seen a big change in prices this year, just January until June, clearly an increase here in Phoenix in the monthly median. And this article goes on to talk about how the limited amount of inventory coming onto the market has fueled competition among buyers and caused home prices to rise in the first half of the year. So that happened nationally. And we look at Phoenix, and the same thing happened here, starting the year at a median price of about $410,000. And then here, the latest in June is $443, I believe, if my computer would actually work. But 443 there is where we're at in June. So although we're seeing, we had all this change last year and prices softened, then this year came about and we've just been undersupplied throughout the beginning of the year, and that's increased prices. Now, comparing with 2022, however, you don't need to worry because we're still not at that peak of where we were at in 2022. So, we've basically recovered from where we were at ending the year last year and coming kind of close to where we were at last June. But that, big surge in pricing here in Phoenix isn't as significant as taking us back in time to that median price that we were seeing at the peak last May and June. Now, I also wanted to look at sales year to date because more than pricing is impacted, it's actually the transactions and the sales that we're seeing is most impacted. And I'm trying to just make this a little more centered here. And who does that affect? It affects real estate agents, and it affects lenders and title companies more than it affects the buyers and sellers out there, because this is just about the volume of sales. Now, where we're at today, about 39,800, and then from last year, 49,000, so a difference of about 10,000 fewer sales year to date than last year, which is about 20%. So we are definitely seeing a much lower sales rate this year compared to last year. Now, last year was pretty busy. 2021 was really busy. And 2022 is when things started to pick up. But you can see we're still down as compared to those busier years than, this year than where we were at then. Let's throw it all the way back to 2019 because that was before things got a little crazy, although we were in, a seller's market at that time. Still below that, about the same actually as last year, that 49,000 range. So sales year to date and sales and transaction volumes are really what's been most affected here by the lock-in effect. Now, all of this information is hopefully helpful for you just to know what's going on in the market and that if you're hearing these reports, nationally on Yahoo Finance or Redfin or whatever it is, that is also happening here. It's just a little bit different in terms of, sales volumes and difference in pricing and a number of new listings that we're seeing here versus other markets. So I hope that information is helpful. If you've been considering buying, selling, investing, you don't really know where to start, or you just have questions about the market, check the description below. You can reach out to myself and team. We'd be happy to help. You can also get an instant home value on one of those links below if you're curious about that, and search the MLS for homes for sale. So check all of that out. We'll see how things change. On Monday, I'm going to be back with a market update, and we're going to talk about what's going on with mortgage rates because the Fed just increased the federal funds rate again this week. So we're going to talk more about that on Monday. Have a great weekend, you guys. I'm Caitlin McKegg with the Desert Dreamers team.